What is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, and foreign exchange, please go ahead and consider subscribing to the YouTube channel. For those of you all who are interested in the mentorship, the link is in the description down below. Today, I'm going to be going over how you could have capitalized on 6% trading the foreign exchange markets on your overall capital, okay? Utilizing fundamentals as well as technical analysis. So make sure that you smash the like button if you guys enjoy these video breakdowns, and make sure that you all are subscribed to the YouTube channel. So as you guys know, the risk off sentiment has been pretty much swarming the markets lately, where we can see that the Russian-Ukrainian conflict has not dwindled down at all. All right, and reading this article from fxstreet.com, just to give you guys a little bit of an update how we could have utilized these fundamentals to our advantage, right? If we know that there is a risk-off sentiment in the market, meaning that safe haven currencies are most likely going to pick up strength. Well, if we're trading a currency pair like the Great British Pound against the Japanese yen, we know that if, risk-off sentiment is flooding into the market right now, we know that trading against the Japanese yen would favor selling, right, the Great British Pound against the Japanese yen. Why? Because the yen is going to be picking up strength. And as we can see, the past two New York sessions, the yen picked up strength and GBP, JPY sold off. So I'm going to show you guys how you could capitalize on the fundamental aspect of things, as well as utilizing technical analysis along with your trading to capitalize on two beautiful 1-to-3 risk-reward ratios. Now, we're not greedy. I teach the students in the CYPRX mentorship to pay attention to 1-to-3 risk-reward ratios. A lot of these, order block traders and smart money concept traders will tell you guys that you can capitalize on 1-to-12s and 1-to-10s and 1-to-15s all the time, but that's not realistic in the market, and that's not guaranteed. Now, neither are 1-to-3s, but what I attempt to teach traders on the CYPRX mentorship is not to be greedy and to take profit when it is given to you, okay? Now, 1-to-3 is much more, realistic than a 1-to-12 to a 1-to-15 on a consistent basis, okay? Especially on a pair like GJ. Right? So utilizing fundamentals, just to go over this aspect before we jump into, the technical analysis. This article reads here, and this is from fxstreet.com. Anybody has access to this. It says, Eastern Europe developments continue to lead financial markets. Safe haven assets turned higher mid-European morning as Russia escalated its attacks on Ukraine, while President Vladimir Putin said that the invasion would continue until he reaches his goal. So most likely this means that safe haven currencies and as well as gold, right, are going to pick up strength. Usually, neutral countries are joining global efforts to stop Russia. Switzerland and Finland, among others, are either sending armor to Ukraine or joining the financial blackout to Moscow. Okay, so you guys can read through this article. You guys can see how risk-off is still swarming the market, meaning that safe haven currencies are going to pick up strength, and more risk-sensitive currencies like the Great British Pound are going to depreciate in value. Okay, so utilizing that information fundamentally, we can come over to the charts and we can see, right, that we know what? We know that based off of what it is that I teach you guys, in order to see a sell position, same thing as above, so below, we need to see the market makers grab some type of liquidity above highs, have a rejection from a psychological level, break structure, or create lower highs and places where we can look to sell from. Okay, but what is the significance about taking sell positions in both of these scenarios that I'm going to show you guys? Okay, just look at the price action that I just drew on, and it doesn't matter how you draw it. Okay, it doesn't matter which way or which direction you draw it. It doesn't matter. What is the significance of both of these examples that I just drew for you? Can you answer that question? Okay, the liquidity grab, the rejection of the psychological level, and the momentum match that leads to market breaks and structure. Okay, those are the things that we're going to be paying attention to in both of these examples, and how we could capitalize on 1-to-3 risk-reward ratios utilizing both of these methodologies during New York session the past two trading days. Okay, so I want you guys to focus and pay attention, because again, this is what I teach in detail, in advanced detail, to the CYPRX students. Anybody that is interested in trading the foreign exchange markets, you guys are more than welcome to either follow me on Instagram or join the mentorship. The link is in the description down below, or you can just join at cyprxteachable.com. Okay, but utilizing the methodologies that I just taught, what is it that I show you guys prior to every single session exists, right? Answer that question, can you? Early buyers and early sellers prior to every single session. So where are the early buyers and where are the early sellers? A lot of people will call this buy stops and sell stops and blah, 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 and smart money and things of that nature. But the way that I try to teach the students to perceive the charts is people prematurely involving themselves in the market before the session begins. Every single session has these people in the form of early buyers or early sellers. And the market makers, yes, they will accumulate buy stops and sell stops. And yes, they will liquidate those positions. But what they're also doing is they're attacking people who have their stop losses above these highs and beneath these lows. And then they're moving the market, okay? So what I want you guys to focus on is when you see a liquidity grab, once you see the liquidity grab, you see a rejection of a psychological level after that liquidity grab. I've been attempting to teach you guys that here on YouTube. And what can we see here? We see the markets have early buyers prior to New York session open. As soon as the session opens, we see buyers flood into the market. The market makers immediately come and liquidate those positions, okay? Once those positions are liquidated, we see a nice bullish rally. Now, if this was a proper bullish rally, what would this have consisted of? What would this have consisted of? It would have consisted of a higher low that led to a higher high, right? In a continuation or a market continuation. It didn't do that. We see a bullish rally. We see it reject the psychological level. And as soon as it does that, not only does it break previous market structure, but it also starts to print lower lows and lower highs. Even though they haven't broken structure yet until we get to this low, the market started to create lower lows, lower highs, lower lows, lower highs. This is an identification to us as CYPRX traders that the market does not want to occupy space above this psychological level. So what can we do with that information, right? We can identify this as an area of liquidity where prior to 8:30 a.m., people were attempting to sell early on in New York session, okay? So now we know that market makers are the only people with the amount of money to move the market in their favor with this much momentum and this much volume, okay? We can capitalize on a nice pullback and hope to get in on the trend. So what is it that I teach you guys? After the liquidity grab, taking your Fibonacci from the most recent lower high to the most recent lower low. So we would take our Fibonacci from A down to B, extend that over, and would you look at that, guys? We get a 70% Fibonacci retracement. You could have capitalized on this beautiful, beautiful move. Again, I don't focus on indicators. However, we do get a nice, beautiful moving average crossover. This is on the 1 minute chart, and you guys can see how that would have resulted in 100% Fibonacci extension and a beautiful 1-to-3 risk reward ratio. Again, focusing on the market makers capitalizing on early buyer and early sell side liquidity, okay? Capitalizing on taking that, and once we see a market shift away from that, then reacting to the market. Okay, notice how every single example that I show you guys on YouTube, we are not reacting to the market until we see the market makers manipulate price action. How are they manipulating price action? They are enticing people to buy because they know that people chase bullish candlesticks, watching candlesticks on TradingView. You know how many people had buy positions underneath of these lows? A lot, okay? Chasing the market all in this area. Then the market makers immediately reverse, give us an identification, right, that they want to reject the psychological level by doing what? Printing lower lows and lower highs. If this was a proper bullish momentum move, we would have not broken the momentum move, okay? But we did. We completely rejected the psychological level and broke structure, created a new swing low, right? So now, if we want to get in on the moving train, we know that a downtrend consists of lower lows, lower highs, lower lows, lower highs. So what are we going to do? After the market grabs liquidity, which it did here, we're going to look to capitalize on entries at one of the lower highs. Okay, absolutely beautiful example from yesterday's New York session. Now let's scroll over to today's New York session, utilizing the same methodologies. Look at this, okay? Look at the similarities. It's different price action, same principles, same concepts that I teach you guys. We have early sellers prior to New York session. Where are they at? Can you identify them? They're right here, 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 and here. And would you look at that? What is this, guys? This is retail trendline liquidity. We know that retail traders are drawing some type of imaginary trend line above these highs, and they're most likely taking sell positions from these highs every single time the market makers push price back up into this area. They're selling. They push price back up into this area. Oh my gosh, price is respecting my trend line, right? And they're taking sells. So their orders look like this. Okay, all above these highs. Here, here, and here. So what do the market makers do? They need to grab liquidity, and us as CYPRX traders are not going to react to the market until we see that grab of liquidity. Well, would you look at this, okay? Again, as the example previous to this one, we see a false bullish move. How can we identify that this is a false bullish move? Because as soon as we tap into the psychological level, we reject the psychological level, break previous market structure higher lows. Where are the previous market structure higher lows? Here, 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 and here. Would you look at that? We have a market psychological level rejection and a break in structure. Now the market has created a new swing low in comparison to the previous one. The market retraces, creates a new lower high in comparison to the previous one. So now this is a lower low, lower high formation. This lower high leads to a new market lower low. So the market has now shifted momentum. So we can now classify this as a liquidity grab. Another significant aspect of this trade breakdown is that the market makers did not break the previous high. Okay, so now this high, even though it did grab internal liquidity, did not break the overall structure high. So we broke structure here. This is now an A to B move. Okay, so we're operating inside of A to B, or inside of this trading range, right? This is just identifying structure properly. Okay. So far, if you guys are with me, make sure that you smash that like button. Again, if you need to recap and rewind the video, make sure that you do so. Don't get lost. So now that we've created lower lows, lower high formations, all you would have had to done to capitalize on this beautiful risk to reward ratio is take your Fibonacci. Again, after the liquidity grab, where's the most significant lower high? Right here. Take it from the high to the low, extend that over, and look what we get. 70 to 79% discount. There's your entry. GBP/JPY stops above the previous high, and you're targeting your Fibonacci extensions or a 1 to 3 risk to reward ratio minimum. And look at that. Again, same principles, same concepts. Yesterday's price action, today's price action, beautiful risk parameters and beautiful trade execution, utilizing the methodologies that I teach to you guys here on YouTube, as well as in advanced detail in the CYPRX mentorship, attacking early buyers, rejecting psychological levels, paying attention to liquidity, paying attention to structure. Again, we don't really utilize the moving averages here, but if you do utilize indicators, you guys, here was a moving average crossover, same as the other example. You could have utilized that as another confluence, and we have a beautiful RR, okay? Blessings to you guys all. I hope that you enjoyed this video breakdown. Again, this is me just showing you guys the methodologies that I teach come into fruition, if not almost every single day, every other day in the market. Again, you all just need to pay attention to the fact that the market maker's goal is to grab retail traders' money and move the market in the opposite direction. Once you can see the market for that, and what it actually really is a move to make the market makers more money and to take money from you as a retail trader, then you can seriously start to capitalize on moves. Stop focusing on these smart money order block traders, okay, that teach you all that order blocks get respected all the time, because they don't, okay? Institutional order flow does not come from order blocks. It comes from them grabbing liquidity above or below market session highs or lows, okay? Again, that is all stuff that I go into in advanced detail in the mentorship. Anybody that is interested in trading the foreign exchange markets, that link is in the description down below. You guys can always follow me on Instagram for daily motivational trading posts. Blessings to you guys all. As always, be cognizant, be aware. Everybody, take it easy, and I'll see you all in the next video breakdown.